Alcoa's results mean that earnings season is underway, and the overall results could confirm something that many investors fear, namely that corporate profits are in a recession, about to decline for the second quarter in a row. Dominic Chu tells us what to expect from those fourth quarter numbers.
Earnings season is kicking off, and some traders are worried about what could be an earnings recession. Now, in economic terms, a recession is defined as at least 2 straight quarters of negative activity, and we could be seeing that same thing happen for corporate profits. According to data compiled by Thomson Reuters IBIS, earnings at S&P 500 companies for the fourth quarter of 2015 are expected to decline by 4.2% from the same time last year. Now, that would follow what was a decline of 0.8% in the third quarter, so 2 straight quarters of earnings declines possibly.
I think clearly the biggest drag on corporate earnings this season is going to be energy. That's what it has been for all of 2015. I don't think the fourth quarter will be any different.
The best expected earnings growth will come from the telecommunications, financial, and consumer discretionary sectors. Now, it's no secret where a lot of the weakness in profits will come from, the same place it's been coming from in recent memory. Despite all the negative headlines surrounding oil and energy-related companies, some experts still think valuations are approaching relatively attractive levels.
I think we're going to bottom on energy and oil in the first quarter of 2016, and I would expect that's going to be behind us. So probably the trough in earnings may be the first or second quarter, and I think by the third or fourth quarter, we'll start to see positive relative performance to last year in the earnings sector. So I think really earnings in the energy sector could be a contributor for all of 2016.
The last time that the S&P 500 energy sector actually produced profit growth was the third quarter of 2014. And the forecasted declines in profits for the sector are so pronounced that if you hypothetically stripped away energy companies from the calculations, you'd actually get forecasted profit growth. Now the question for investors is whether or not all of that pessimism has already been priced into stocks, or is there more downside ahead? For Nightly Business Report, I'm Dominic Chu.